It is probably the most common and yet most invisible action in our daily lives. Just think about it for a second. You're at a coffee shop, you're at the grocery store, you hold up your phone or a card, you hear that little beep, and you just walk away.
It's just muscle memory. You don't even think about it.
Not at all.
Yeah.
But have you ever stopped to consider the absolute beast of a financial machine that has to wake up in that split second to make the beep happen?
The fraud checks, the authorizations, the data centers, it's a global network firing on all cylinders.
Exactly. And today, that is what we're doing. We're looking right under the hood of that engine. We're doing a deep dive into Visa.
And it is a staggering engine. We see the logo in our wallet and think credit card company, but really it's a global platform for trust and data. It's the plumbing of the world economy.
And we have the freshest numbers to see just how big that plumbing is. We're looking at Visa's fiscal first quarter 2026 results, which just came out on January 29th. Our mission today is to get way beyond just the stock price. We've got the official earnings release, the slide decks, the operational data, and we want to know what it all tells us about the world right now.
If we connect this to the bigger picture, Visa is basically a barometer. They see so many transactions that their health tells us the real story about consumer spending, about travel, about how money's really moving.
Okay, let's unpack this. Let's start with the headline numbers because, honestly, they're just huge. Visa reported net revenue of $10.9 billion for the quarter.
Just for the quarter.
For 3 months. And that is a 15% increase year over year.
And that's the first big takeaway, 15%. Even if you strip out the currency effects and look at it on a constant dollar basis, it's still 13%.
Which for a company this big feels fast. This isn't some nimble startup.
Not at all. A company of this scale, a financial giant, you'd expect them to be happy with, single-digit growth. They're supposed to be slow and steady. This is a giant moving at a sprinter's pace.
And it's not just revenue, they're keeping a ton of it. The GAAP net income was $5.9 billion. That's up 14%. But I did notice the non-GAAP profit was a bit higher at $6.1 billion. What's the story there?
Yeah, that's a great question. It's less about, creative accounting and more about isolating the core business performance. The difference is what they call special items.
Special items.
So in this quarter, they had a huge one. They had to set aside a lot of money for litigation. Specifically, this long-running lawsuit with merchants over swipe fees.
Ah, okay.
So the non-GAAP number basically says, okay, if you ignore that one-off legal charge and some tax things, this is how much profit the machine actually generated. It's the cleanest look at the health of the engine.
And that engine is incredibly efficient. Profitability is growing almost as fast as revenue.
Faster in some cases. That's the definition of efficiency.
But this brings up the big question, the one I think everyone is wondering about. We hear constantly about inflation, economic uncertainty, this vibe session. Is the consumer finally tapped out?
That's the real aha moment in this report. The CEO, Ryan McInerney, said it directly. The results were driven by resilient consumer spending and a strong holiday season.
So all the gloomy headlines.
Yeah.
The data says otherwise. People kept spending right through the end of 2025.
Exactly. If the consumer was really cracking, Visa would be the first to know. You wouldn't see a 15% revenue jump, you'd see a slowdown. But we just aren't seeing it.
It's data versus narrative. The narrative is gloom, but the data, the actual receipts, they tell a different story.
Precisely.
Okay, let's get into that engine room. Let's talk volume.
Yeah.
Total payments volume was up 8%. That's the raw amount of money in the pipes. But I saw a split when I looked at the geography.
The U.S. versus the rest of the world.
Right. The U.S. grew at 6%, but international grew at 10%. So is the U.S. consumer weaker?
I wouldn't say weaker. I'd say more saturated.
Yeah.
The U.S. is a very mature market for digital payments.
Meaning almost everyone already has a card.
Exactly. You, me, pretty much everyone we know has multiple cards. You can pay your rent, your taxes, buy from a food truck. So getting 6% growth on a base that huge is actually really healthy and steady.
Okay, so the U.S. is a full glass.
And international markets are still being filled. That's where you're seeing that cash-to-card conversion happening in real time. In many parts of the world, cash is still a huge part of the economy.
And every time someone switches from using a banknote to tapping a card, Visa wins.
They win. And that's why that international engine is running hotter. There's just more runway.
Speaking of running hot, the transaction count, I had to read this number twice, 69.4 billion transactions in 3 months.
Let's try to put that number into perspective because it's so big it almost loses meaning.
Please do.
That breaks down to roughly 750 million transactions every single day.
750 million a day.
Every day, which is about 8,600 transactions every single second. And just imagine the infrastructure needed for that. Each one of those 8,600 transactions per second has to be checked for fraud, routed, authorized, and confirmed, all in the time it takes to hear that beep.
And it can't fail. If Visa goes down for an hour, the global economy feels it.
That right there, that's their moat. That scale, that reliability, that trust. It's almost impossible for a competitor to replicate. That 69.4 billion number is proof that their moat is as wide as ever.
It's just mind-boggling. But within those transactions, I saw an interesting detail about debit versus credit.
Yes, the mix tells a story.
So in the U.S., credit grew a little faster than debit, 7% versus 6%, which feels normal, right? People using credit for rewards for bigger purchases.
That's the classic American model, yeah.
Huh.
We like our points, but the international numbers were flipped.
Right. Debit grew 11% internationally. That's much faster than credit growth over there. What does that tell you?
That tells me it's about the digitization of everyday small ticket spending. It's not someone buying a new TV on credit. It's someone buying a coffee or a bus ticket with their debit card where they used to use coins.
So the card is literally replacing cash in their pocket.
That's it exactly. It's the coffee factor. Once you get used to tapping for your morning coffee, you never go back to fumbling for change. It becomes a habit, and that's a massive, sticky source of growth for Visa.
It's a lifestyle shift. Okay, let's talk about travel. Cross-border has always been a huge, high-margin part of their business. Are people still getting on planes?
They absolutely are. Total cross-border volume was up 12%. But they have this one metric that's important to understand, excluding intra-Europe.
Right. Explain that. Why do they pull Europe out of the numbers?
It's not because anything's wrong with Europe. It's just that a transaction between, say, Spain and Italy is technically cross-border, but because of the Eurozone, it behaves more like a domestic transaction. The fees are low, the currency's the same.
Got it. So to see real international travel, someone flying from the U.S. to Asia, for example, we need to look at that excluding intra-Europe number.
Correct. And that is the best proxy for global tourism and business travel. And that specific volume was up 11%.
So much for the post-COVID travel boom fading away.
It's not fading. It tells us that despite inflation, despite everything, people are still prioritizing travel. That's a very strong signal for the experience economy.
Okay, here's where it gets really interesting for me, though. We think of Visa as the toll booth for payments. But when you look at how their revenue breaks down, it looks like they're becoming something else entirely.
This is the most fascinating part of the report, and the part most people miss. You see the normal stuff, service revenue and data processing? That's the toll road.
The swipe fees.
Yep. But then there's this line item called other revenue.
And that came in at $1.2 billion. But the growth rate, it jumped 33% year over year. That's more than double the speed of the core business. What is in there?
This is what the CEO calls Visa as a service. This is not swipe fees. This is them selling consulting, data analytics, and high-tech security and fraud prevention tools.
Wait, hold on. So they're selling the software and the expertise on top of the payments network.
Precisely. I mean, think about it. They see data from nearly 70 billion transactions. They see global spending patterns nobody else does. They can now package those insights and sell them back to their clients, the banks and the merchants.
Like what? Give me an example.
Sure. A bank wants to launch a new card. Visa Consulting can analyze the data and say, hey, for this demographic, you need to focus your rewards on dining and travel because that's where spending is surging. That's an incredibly valuable insight.
And they pay Visa for that data.
They do. Or Visa sells a bank an advanced AI tool to stop fraud before it happens. That's a software subscription. It has nothing to do with the physical swipe.
So they're becoming a tech company, a platform, not just a payments network.
A hyperscaler, as the CEO put it. And at 33% growth, that other revenue is going to be a huge part of their business very soon. It makes them much stickier.
It's like they're moving from just operating the toll booth to designing and selling the entire traffic management system for the highway.
That's a perfect analogy.
Okay, but it can't all be high-tech growth. We have to talk about costs. I saw the operating expenses line and did a double take. GAAP expenses jumped 27%.
Yeah.
That's alarming.
It looks scary, right? But this is where you have to dig in. Almost all of that jump comes from one thing, that litigation provision we talked about earlier.
The $707 million they set aside for lawsuits.
Yes, for that big interchange MDL. It's a massive legal cost, but it's a one-off. If you look at the non-GAAP expenses, which pulls that out, growth was only up 16%.
Which is much more in line with the revenue growth.
Much more manageable, yes.
Okay, but there's another cost that is just staggering. Client incentives. They spent $4.3 billion on this. What is that?
This is the cost of staying on top. This is the money that Visa pays out to banks like Chase or Bank of America.
Why?
Because those banks have a choice. When they issue a new card, they can put a Visa logo on it or a MasterCard logo. Visa pays them incentives rebates, marketing dollars, to make sure they choose Visa.
So to earn that $10.9 billion in revenue, they first had to give back $4.3 billion just to keep their partners loyal.
You got it. It is a deeply competitive business. But the fact that incentives grew 12% while revenue grew 15% is actually a good sign. It means they're not overpaying to buy market share.
That makes sense. Let's switch to shareholders. If you own the stock, this quarter looks like a home run.
A very, very good quarter for shareholders. Visa returned $5.1 billion to them.
How do they do that?
Two ways. $3.8 billion in share repurchases. That's buying back their own stock to make the remaining shares more valuable. And another $1.3 billion was paid out in cash dividends.
But I also saw this kind of weird financial move. They put $500 million into a litigation escrow account. What is that about?
Okay, this is a deep dive within the deep dive. It's some pretty clever financial engineering.
Lay it on me.
Visa has two classes of shares, Class A, which we can all buy, and Class B, which are held by the banks. This escrow mechanism is designed to use the bank's Class B shares to cover these big litigation costs.
So they're protecting the public shareholders from the lawsuit risk.
In a way, yes. It has the same economic effect as a buyback for Class A shareholders. It insulates the publicly traded stock from these huge legal fights. It's a very smart move to protect the stock price.
Incredibly savvy. Okay, so what's the outlook for the rest of 2026?
One word: consistency. They're guiding to low double-digit growth for revenue, for operating expenses, and for earnings per share.
Almost boringly predictable.
But in this economy, boring, predictable double-digit growth is exactly what investors want to see. They're a compounding machine.
So let's wrap this. A really strong quarter, revenue up 15%, a consumer that just keeps on spending, and this huge, almost hidden growth in their tech and data services.
And that 33% jump in other revenue is the key. That's the signal. They're actively evolving from a payment pipe into a data platform.
It really makes you think differently about the card in your wallet. The next time you tap to pay, you're not just moving a few dollars. You're a data point feeding a $10.9 billion quarterly engine. You're part of that Visa as a service stack.
You're part of a massive global shift from physical cash to digital commerce.
So here's a thought to leave everyone with. With that other revenue growing at twice the speed of everything else, at what point do we stop calling Visa a payments company? At what point do they just become a data and AI company that happens to move money on the side?
That's the trillion-dollar question, isn't it? If they can monetize the data better than the transaction itself, the whole model changes.
Something to think about. Thanks for joining us for this deep dive.
My pleasure. Always good to question the numbers.